So some relief for buyers. Is that enough to say this is a buyer's market? Are we on the way there?
No one wants a lot of relief because they don't want what comes with lots of relief. Every time you get a lot of relief, it comes because something terrible is happening and everyone goes on their heels anyway. We should have another Fed rate cut, roughly, right, in about a week or so. That'll slowly put pressure on mortgage prices. Although I don't know, because we have a government shutdown right now, so no one knows what's happening. Unemployment, we don't know. And we just keep moving forward. But your 30 years in the low 60s, ARMs are in the high 4s, you know? Like that's a moving market, so that's what we're seeing.
Well, let's talk about that continued pressure on mortgage rates, because if we do get meaningfully lower, where things actually start to feel a little bit cheaper, I mean, how many buyers are just lined up on the other side of those lower rates, ready to jump in?
About 4 million.
Yeah.
Yeah, like if you look at historically where we were in probably the healthiest real estate market we've known in the last 25 years, we should have at least 6 million, if not more, home sales nationally every year. We're hovering now at around 4, and that's where we've been for the last 3 years in a row. And you're starting to see some of that weakness. September, I think, had the longest days on market for a home in the United States, about 50. In 10 years. Pricing continuously creeps up. So we need pricing to come down a little bit so there's more affordability. We need affordability to track with income, which just hasn't happened in quite some time. So there's a lot of things that have to come together so that the housing market could open back up. But if you're in the market, you can get a deal right now.
If we do see that market open back up, is that going to be across the nation, or is it going to be confined to certain geographical regions?
No, it'll be across the nation. The luxury market is always there, right? It has its peaks and valleys, but people are always excited to buy luxury because they look at it as an alternative to other types of investments, right? Like gold. Gold is up, what, 66% this year? Those buyers are also putting dollars into real estate. What we really want is for the average American to be able to balance the monthly costs from a rental to a home. And right now, it is cheaper to rent in most markets than it is to buy, where in a lot of markets, the starter price is still over $1 million.
Yeah.
Just on that last point, though, about luxury buyers and particularly the idea of using real estate as an investment, are you seeing more competition, particularly in that space? And I mean, like the idea that real estate was kind of that tried and true real asset, if you would, that diversified your portfolio. But there's so many other alternative assets out there right now. Are you seeing any meaningful competition for real estate as an investment?
Oh, yeah. I had brown hair this morning.
Yeah.
I mean, between all of our prime markets, New York City, Palm Beach, Miami, the West Coast, I mean, you know, we have our TV show on Netflix, Owning Manhattan. The second season comes out December 5th. There's a deal on that show, which is a bidding war for a $60 million property in the west side of New York for a resale. Those buyers want what they want. We just put a $75 million property in Palm Beach into contract, and it was a bidding war between 2 separate purchasers. But yet across the street, for a home that's worth maybe 10x less, it's taking time to find movement. So at the top end of the market, there's very, very little inventory, and buyers are pushing.
Well, that's certainly a stratosphere that very few can relate to. So let me bring it to something a little bit more tangible. I am looking in Hoboken right now, for example. Nearly every place is turning into...
Ryan. Every day. This is all she talks about.
Romaine hears about it all the time. Every place, every property pretty much goes into a bidding war. Everyone's a cash buyer. And I think some of the pressure that people feel is that we're heading into a seasonally slow period. We're heading into the holidays. And you fall into this game when you're going to all these open houses, which is all I do, is that how do I know that I'm not going to see something better listed come back in January, come back in February? And I wonder, you know, when it comes to some of these really hot markets, what that equation looks like.
How long does it take you to order dinner?
About 10 minutes.
That's a long time.
Yeah,
it's a long time. Listen, you can always wait for something better, in which case you're just going to stay in the current home you're in and you're not going to be able to enjoy life. At some point, you have to give, and no one can ever perfectly time the market. If you see something you like, you really like it, and you make an offer that you think is a good deal, where if you get it, you won't have buyer's remorse, but if you lose it, you won't feel bad either, because you'll say, so glad they got it, then move forward. Like, life is short. A long time ago, an asteroid came out of the sky and killed all the dinosaurs, and they don't get to have houses in Hoboken either.
That's true.
So onward and forward.
On that point, though, and since we're sharing anecdotes about our housing
where do you want to buy? I'll help you.
Well, that ship has sailed. But it gets to this idea of the sellers. So a lot of them are sort of locked in because They bought at much lower rates.
Yep.
They're trying to sell at prices that are elevated, and we ran into this issue. And I had one seller, we had a long back and forth, like several weeks back and forth. We're not budged. He tried to offer some concessions here and there, but ultimately the price was the price. And ultimately what he told us, me and my wife, was basically like, look, he's like, I'm basically breaking even on this at that price. And if I take what you're offering, I'm losing money. And I do wonder where that balance is right now across the board.
Yeah, we have that conversation with everyone, even in the luxury market. If you bought at the top of the market, right, either somewhere between 2013 and 2016, or in a suburban market somewhere between 2020 and 2022, there is a chance right now that you might break even or take a loss. But it's not all about the singular asset. The conversation we have with sellers all the time is think about your life as an entire movement. You take a little bit of a loss here, but it's okay. Let's look at your portfolio. How much has it risen over the past 4 years? You're thinking about one little loss here when you've gained wealth over here. You have to think about the entire package of your life. And what we tell sellers too is you might think you're selling at a discount to today, but if the market goes the opposite way, which I don't think it will, but if it does, the offer you have on the table today is a premium to what you could get 6 months from now. So you can roll the dice if you want to, or let's move on. Like, again, you know, people sit and they count pennies. You don't want to cut your nose to spite your face.